What's up, you guys? Welcome back to the channel. Now in today's video, we're going to go over if NIO is a buy right now and whether you should be adding more shares to your portfolio, especially considering the way NIO has been trading in the last week or so. We're also going to touch on why NIO has been trading kind of weird today and why they're up a couple percent early on in the trading day and now why they've kind of pulled back and it looks like they're kind of flattening out right around 1 to 2% in the red. But before we actually jump into the video, for those of you who are new here, my name is Evan and I make videos showing you guys different ways to make money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now, like I mentioned, NIO is trading kind of weird today and they opened up a couple percent in the green. And then after a couple hours of trading, they pulled back and now they're down almost 2% in the red. And they're trading right around $57 to $58. But when they were in the green early on in the trading day, they were up to about $60 and right over 60. And so we're going to cover a couple reasons as to why they actually opened higher and now why they're pulling back to where they are right now. But before that, I want to show you the 1 week chart and you can see here they're actually down 10% on the week. And it's actually been a pretty rough week for NIO. And this does show you that NIO is a normal stock and they don't just continually go up. And this is healthy for any stock because they can't just continue with this upwards trend like we've seen. Because of course, when a stock just continually goes up, obviously at some point people are anticipating a pullback. So it's healthy to see NIO have these red weeks and these neutral trading weeks. But again, you can see that they're trading pretty flat and they really haven't had a lot of action in the last week. Now, the first major reason to why NIO has been down the last couple hours is just because the overall market has been down. Now, the market opened slightly in the red, and I'll throw up a screen recording here of SPY so you guys can see SPY on the 1 day chart. And they actually opened just below neutral. And then within a few hours of the market being open, they pulled back. And it's a very similar chart to what we've seen in NIO today. And the reason why the overall market's pulling back is because there's actually concerns about new vaccines. And these vaccines that are currently in the works for the pandemic, they're not nearly as effective as people were hoping for them to be. And so the market's reacting kind of negatively to that news. And one other major thing that's pulling NIO and a lot of other EV stocks back is actually Tesla. Now, Tesla didn't quite hit their earnings that were predicted early on. And originally the consensus analyst estimate was $1.03 for earnings for Tesla. And their adjusted earnings per share actually came out to 80 cents. So it didn't quite live up to the hype and the analyst predictions. And so that's why we saw Tesla pull back yesterday and why they're still in the red today. And we know NIO and these other electric vehicle stocks are very influenced by Tesla's share price. So because Tesla didn't quite hit earnings, they were impacted. And then of course they impacted the smaller electric vehicle companies. And we see that reflected in all their share prices. Now Tesla also announced fourth quarter revenue, which was $10.7 billion. And this was actually up 46% year over year. And it was ahead of analyst forecasts. And the analyst forecast was $10.4 billion. And so that does sort of help balance out the earnings and the fact that they didn't quite hit the analyst earnings. But again, this is kind of trickling over and affecting these smaller EV stocks as well. But the reason why NIO was higher early on in the trading day was because there was actually a new price forecast put out for NIO. And this price forecast came from Morgan Stanley. Now, I think this is going to be positive news and it's going to start bumping up NIO in the coming trading days and into next week as people start getting more news of this. But as of right now, with the overall market being down and with Tesla being down so much, again, it's really affecting NIO and these smaller EV companies. But this price forecast from Morgan Stanley was upgraded from $33 all the way up to $80 per share. And NIO wasn't the only one that they covered. They also covered Li Auto and XPeng as well, upgrading Li Auto from $26 up to $49. And then they also covered XPeng with a target of $70 per share. And then separately, some news and a commentary from a website called Electric, which covers electric vehicle industries. They also reported a test drive on NIO's midsize ES6 SUV and noted that NIO is believed to be preparing to offer their vehicles in Europe. So that would be a huge move for NIO going forward. They want to at least expand to Europe by the end of the year, and that was what was originally in the works and what they were originally discussing early on. Now, as to whether NIO actually succeeds at that and they do expand to Europe, it's just a waiting game and we have to wait and see if that actually becomes true. But if that is the case, and like I've said before, a lot of these bigger catalysts are coming up in the near future. These things are really going to drive up the share price of NIO. And so these times when we see pullbacks, especially on the weekly chart, those are most likely the times that you want to add to your portfolio and really beef up your position when you can get these shares for a cheaper price. Now, I'm not saying this is the case, especially if you don't believe in NIO long term, but if you are a long-term believer of NIO and these other electric vehicle stocks, when they have these pullbacks and these red weeks, at least in my opinion, that's the time to add more shares to your portfolio. Now, aside from NIO expanding to Europe, another big catalyst to look forward to in the near future is their delivery numbers for January. And January delivery numbers are expected to be released at some point early next week. And so with all the negative news around the entire market and around Tesla as well, there's not too many auto investors anticipating deliveries next week, because if that was the case, and with this new price forecast put out, I don't think we would see NIO pulling back as much today, and they probably would actually be in the green as of right now. And I think with deliveries coming out early next week, this is going to be a big thing for NIO, because you guys probably know that recently they offered a 0 down payment option for their vehicles and for new customers. So this basically allows new customers to purchase a vehicle putting 0% down for their down payment. Now, of course, they're going to have a higher interest rate and higher payments per month, but the whole goal with this was for NIO to increase their customer base and acquire a lot more customers in a shorter amount of time. Now, there's estimates that they could possibly hit 10,000. Now, that's a bit of a stretch, I think, but I do expect them to possibly hit over 7,000 deliveries that they actually racked up in December. Because for those of you who missed deliveries in December, NIO actually delivered 7,007 vehicles, and this was their highest month yet. And especially with the Chinese New Year at some point in mid-February, there's probably going to be a lot more purchases that happen this January as compared to any other month, and especially as compared to any other year previously. But beyond just deliveries, another thing to look forward to is earnings, and earnings are going to be released at some point in mid-February most likely, and so we're going to see earnings for fourth quarter. Now, once those are released, again, that's going to be one of those big catalysts, because we know NIO reacts very positively when there's good news that's released, especially news relating to their numbers and their financials. We've seen it in the past, and we're going to continue seeing it in the future. And so as long as earnings hit expectations, and especially if they exceeded expectations, NIO's share price is going to see a nice upwards trend once that day comes and earnings are released. But I want to touch on one more thing relating to the Morgan Stanley price prediction. And the reason why this analyst actually raised his forecast was because he forecasted that electric vehicle sales were going to be about 1.7 million units this year in China. And his earlier estimate was actually at 1.5 million vehicle sales. And as we discussed in an earlier video, vehicle sales of electric vehicles in China actually exceeded 1 million. So 2020 was the first year with over 1 million vehicle deliveries in the electric vehicle sector. Now, I don't know if this is specific just to vehicles, or if this includes smaller personal transport like scooters and things like that. But even so, even if it does include those, 1 million electric vehicle sales in a single year is huge. And as you guys probably know, and I've mentioned in previous videos, by the year 2025, they want to increase to 5 million electric vehicle sales in a single year. And then by 2030, I believe it's supposed to be about 10 million electric vehicle sales per year. And so with that in mind, if electric vehicle sales 5x in the next 5 to 10 years, theoretically, NIO's share price should do the same thing and reflect that in their share price and their market cap. Now, of course, there's going to be a lot more competition by then, and there's going to be a lot more electric vehicle companies. But these ones that are starting out early on, like NIO, XPeng, Li Auto, and especially Tesla, these are going to be those top winners, and they're going to be the ones really competing at the top level. And even though a lot of these electric vehicle companies are considered overvalued right now, and they're trading for 40 to 50 times their sales, I think it's still justified considering that investors are looking into the future, and they're looking where NIO could be in the next 3, 4, 5 years, and especially in the next 10 to 20 years, and especially if these smaller companies don't go bankrupt and don't have massive negative news, they're going to continue their way up to the top, especially once they start expanding around the globe. And like we mentioned earlier, NIO plans to expand to Europe, and if they can do that by the end of this year, their share price is going to see a substantial upwards trend. Now, one other possibility on why NIO could be down is because there's still a lot of hype around GameStop. And if you guys don't know what happened with GameStop, it was basically a short squeeze, and now their price has gone through the roof and up to the moon, where they were trading around $10 to $20, and now they're trading above $300, and they actually hit over $400. So that's one of the things that could be affecting the overall market as well, because as you guys probably know, Robinhood and a lot of other brokerages actually limited people's ability to buy GameStop and a couple other volatile stocks. Now, they said it was for the user's own good, good and to protect people from purchasing a stock that was super volatile. But I think we can all agree that that's not why they did it. And so I think that's one of the reasons why the overall market is down today, because they're still drawing concerns about GameStop. And there's been a lot of investors really fighting back, and they're really not going to take it anymore from these brokerages that try to limit what they're trying to do and just trade stocks. So again, I just wanted to mention that because that's really not in the news today on why the market is down. They're saying the market is down because drawing concerns about vaccines. But you should definitely consider GameStop and these other volatile stocks that people are trying to trade and they're not allowed to, or they're just finally getting limited access to buy shares again. So just keep that in mind when you're trading these volatile stocks, especially like NIO, because you never know what these brokerages could do, especially seeing what they just did. It's definitely something to keep in mind when you're trading a stock like NIO, because again, you never know what the brokerage could do if they decide that they want to take control of it. Now, for those of you who made it this far into the video, I want to hear what you guys think is going to happen with NIO's share price after earnings. So earnings are some point in mid-February, and I think as long as earnings are positive and as long as they meet expectations and if they exceed them, we're probably going to see NIO jump by a good $5 to $10 per share. Now, I'm not basing this on technical analysis, I'm basing this more on what we've seen in the past and where we've seen NIO's share price jump according to past events. So again, let me know down in the comments what you think is going to happen to NIO's share price come earnings. And if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. And when you sign up and deposit $100, you'll get 4 free stocks now. And if you guys want to join the Discord and talk about investing or just learn more and ask questions, feel free to join using the link in the description, or you can also use the top pinned comment down in the comment section. And if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one.